Hey guys, Akil Stokes here. Welcome back to another Weekend Trading Edge video, your weekly look around the markets where I share a few of the top ideas on my radar for the week ahead. My apologies for being late this week, but I've been literally traveling back and forth across the state for the last 3 days, but it is a big week coming up, so I want to share a few ideas. Why is it a big week? Well, I'll share a link in the description box below talking more about it, but we have a lot of news coming out, with the most important bit of news being the US interest rate decision, which is going to happen on Wednesday. Now, there is an expected cut happening, but what the market will be looking forward to, especially with the lack of data that we've seen or delayed data that we've seen recently, is what is the future guidance, meaning what is the Fed looking to do next. So expect fireworks on Wednesday. Now, heading over to the chart, let's start on the euro yen here. We're going to look bigger picture. So I'm currently on the daily, but we're going to pop out to the weekly to gain perspective. And this is a 4-step process that I follow in my trading called IPDE, Identify, Predict, Decide, Execute. You see, right here on the chart, it looks as if we are in the middle of no man's land, right? We have broken and closed above a previous level of structure. There's nothing here. This looks like a full-blown bullish trend continuation opportunity. But wait, not so fast. If I just simply take this line and I zoom up a little bit, or I move it up a little bit to the high of this double top, and I go one more time frame out to the weekly and go all the way back in time to, what are we going to? 2000, or no, not even 2000, 1990, you're going to see that we're actually right at a previous level of structure. Now, I know what some of you guys are thinking, Akil, what the hell does 1991 have to do with 2025? Well, the actual year has nothing to do with it, but this is the most recent level of what we call an outside structure. And outside structure are levels of structure that have not been violated, aka important levels of structure. So although we are in the clear from the last, 20, 34 years, my brain is all mush right now from all the travel, but whatever that math may be, this is the most relevant level of structure we have. Therefore, it is going to be a relevant level of structure that the market cares about. And what I want to do here is just make a simple adjustment. You can see that, again, that horizontal line represents where we are currently at. I either want to adjust that or draw another one and just put it right at the top, because that tells me where the extreme of this zone is at. And what this is going to tell me when I go back down to my daily chart is that this is the level that needs to be violated, broken and closed above, in order for us to be able to make a prediction that price is likely to go higher. And if price is likely to go higher, I would expect us to come back up and retest this level right here. Again, I won't draw a big old zone out, but 184s to 187.8, somewhere around that area. So let's go back down to the daily and show you guys what I'm looking at. Let's go back to reality, right? And you can see that if price action, I probably should have drew a line up there, if price action can violate this level, and this is very important because I don't want to get a false signal right here, and this is something that is a very sneaky, small, little, minute, detailed move that can potentially save you a lot of money. This is the level that needs to be violated in order for us to expect price action to continue up here. So look for a violation of this level. If it happens, look for a continuation up to, again, 184s. Again, we can go straight there. We can pull back and go there, whatever is your personal preference for trading, but keep that on the radar for the euro yen. Heading over to the dollar yen, this is going to be a very similar situation, but instead of going back to 1991 to find relevant level of structures, we just have to go back to early 2025. But once again, you can see price action has come to, we have broken and closed above a previous level of structure here. If I raise this up, again, tracking our outside levels of structure, you want an easy way to track outside levels of structure, just master drawing on your ebbs and flows. Ebbs and flows, ebbs and flows, ebbs and flows. They'll tell you where the market goes. Ooh, look at that rhymes today. But anyway, we violated that level and we put in a break and close here. Now, we spoke about a break and close here. There we go. I'm going to get my arrow working. We spoke about a buying opportunity, which we had right down here. Beautiful pullback, beautiful pin bar showing rejection right at the zone of this gap. Higher high, higher close. Not a very convincing candlestick, but technically a higher high, higher close. That was the entry for the trend continuation trade that we spoke about before. Now, if you are late, you don't want to be late. That's something else we always talk about. Don't be late, right? Do not buy right now. This is where the suckers buy. The suckers buy up here, and then the market does something weird and they get, suckered out of all their money. Wait for what I call a fresh break, right? Wait for a new structure high right here. So for this level to be violated, and then wait for the same thing. Wait for a pullback. And again, making that prediction of where price action can go next if we're likely to go higher. I'm just going to delete these levels right here. I'm going to bring this blue bar up. And my expectation would be this level around here, around 154 even, right? 154 even being like the most conservative point. So again, not as much room as the euro yen, obviously. But if you're someone that's going down to like a hourly time frame or maybe a day trader on a 15-minute time frame, right? You still got a good amount of room. Let's see how much this is, right? Between here and here. You still got almost 75 pips between our highs and our next expected highs. Plus, if you get a little bit of a retracement, that's going to open up even more profit. So dollar yen, very similar situation as the euro yen, just like a miniature micro version of it. Next up is the Kiwi here on the daily. And again, if you've been regular followers of the video, and I hope you are, make sure you subscribe and like it. That way the video's in your algorithm and any other videos that I post. Been doing a lot of video episodes of the Trading Coach podcast recently that have been getting rave reviews. So I'm going to keep them coming as long as you guys love them. You're going to remember that we've been looking bearish for a very long time on New Zealand dollar, right? Ever since we broke this level here back in late September, we have been looking short, and we have been looking short for moves all the way down here. So there is still a potential to continue short. And what we've had here is a pullback and a flag pattern, right? This is just a pullback like this as well, but it's also a nice little flag pattern here. So it is a bear flag in a bearish market, so a market that we have a bearish directional bias on. This is a perfect opportunity if you are a flag trader or a pullback trader to look for that next move down. Heading over to the pound Aussie, this is going to be very similar. I promise I didn't plan this on purpose, having like two pairs that are like almost exactly the same but a little bit different back to back. But hey, it works out. It makes for a good video. But what we've had here is the same thing. We have a violation of our previous level of structure, so previous outside level of structure, which I shall now make the theme of this video. It breaks and closes just by the smallest, but if you guys remember, I don't remember what video it was we spoke about this in, but having black or white rules for your trading, right? I don't want to have a rule that says it's close enough to a break or it wasn't a break enough, or if I do have those rules, I want to define them. But for me, a break and close above or a break and close below is simple. Does it break and close above or does it break and close below? If it's by 1 pip, it's by 1 pip. If it's by 100 pips, it's by 100 pips, right? It doesn't matter. I just want to have a rule. That way I know black or white, is it or is it not? And this is. So because we have that break and close below structure, that allows me to make the prediction that price is likely to continue lower. And if price is likely to continue lower, right? See how we're really systematic and robotic here? Then where am I likely, or where is price likely to go to next? And this is going to be an easy one, right? We have a nice level of consolidation right here. More specifically, I would like this level right before the elephant candle for you guys that are in the know, right? Tier 1 traders, you guys should know this. This is my projection, right? So similar to New Zealand dollar, but more meat on the bone as we're looking for a move potentially from, what is this, 204 quarter down to here, about 100 pips lower. So same thing as we spoke about on the other pairs. There are different ways you can look for it. You can go down to a lower time frame. If you are a pullback trader, we technically had our pullback and our lower low, lower close right here already. So this may be an at market sell, assuming we don't gap or anything like that, which we may. There's been a lot going on in the news this weekend. But if you're looking for something aggressive like that, you have a very, very nice risk reward. Yeah, pretty appetizing for everyone. Yum. And if you're more conservative, just wait for the fresh break. So again, wait to see if we violate this new structure low, and then look for a pullback, and then do the same thing that we just did. Look for a move down there. So another cool opportunity here on pound Aussie. Next, we're going to head to the shiny stuff, gold, right? Gold had new highs. We had a nice pullback as we expected, a little bit of relief. What goes up must come down. And now we're looking to see what happens next. So obviously we are in a big bullish trend. So your bias should be bullish here. And we've ended the week with some very indecisive candles, right? These three candles right here are all called doji candles. One happens to be an inside bar. Pretty much what this means is indecision. The market doesn't know what to do. It is stalling, it is hesitating, it is waiting for future information. Now, again, interest rate decision coming out on Wednesday. There's other news happening in the world as well. But again, that's the big one that will have a big influence on what gold does. But from simply a technical perspective, if we go down to our 4-hour chart, so one time frame lower, you're going to see something very interesting. So you're going to see that price action created what's called a double top, right? We came up, we had a little bit of relief right here, and then we put in a second high, and then we've come back here. Now, here's the thing. You look at this and you may think that the trend is over because we've had this double top. But if you remember the rules on how to identify and read trends with lower low, lower closes of outside returns, you'll notice that we never actually violated an outside return here on gold. So we are still heavily bullish, even if it seems bearish short term. By the way, for you guys, and I'm sorry to say this because it's not for everyone, but for you guys on the tier 1 trading platform, if you are confused about like micro trends and macro trends, meaning like the smaller trends that lie within the bigger trends that lie within even bigger trends, make sure you go back and check out the recording of past Monday's Q&A session, as we did like an hour-and-a-half session, kind of breaking that down and making sense of not only the differences between the moves, but how you can trade both of them as long as you know how to trade both of them. It will make sense when you watch it. But what we have here is we had a nice kind of double top here, right? Not a change in trend. And then we've come down and we've pretty much put in something similar, right? We're looking at double bottoms down here last week as well. Now, we don't necessarily have a double bottom anymore, but what's important about this level is this, right? You can see price action came down, created a low, bounced back up. We came back down, created a second low, right? Bounce back up. We have a little bit of divergence down there as well. If you look at kind of what's happening on our RSI and what's happening on our price chart, very, very, very slight. But if you dig deeper into the candles, you'll notice it. We then again bounce back up from here. We come down here. We create a higher low, right? So a low that is higher than the previous low. And if we were to take out this high, this shelf or this white line I drew in, that would be a very good sign of a continuation higher. And if we continuate higher, yes, that's a word I made up, but it sounds cool, so I'm going to keep using it. I would expect not only a move to retest our double top here, but because we're in that overall bullish trend, for us to travel even further. So keep an eye on that on gold. Again, it's going to be very heavily influenced by the news that comes out this week. But from a technical perspective, that's what you should look for. And we're going to see something very similar on silver, if I remember correctly. Yeah, something very similar on silver. Silver put in a different type of rotational pattern. Instead of a double top, it put in what's called a head and shoulders. So left shoulder, head, right shoulder, and then we progressed really, really well off of that. We've done the same thing here where we've come in, we've put in some consolidation, right? Same thing as gold. If price action can violate this line, this level, then we're likely to continue higher. Again, you can see the divergence here on the chart. Look at what our price is doing. Look at what our RSI is doing. Good signs that a bullish move is going to come, at least from a technical perspective. Again, keep saying it, but the news is going to highly influence what we see on the charts this week, so make sure you pay attention to that. Short and sweet this week. If you like what you saw, do me a favor, show me some love, hit that like button, subscribe if you're not already, that way you don't miss the videos that are coming this week. There's brand new ones, I can promise you that. And if you have any questions or comments or anything you want me to take a look at in the future, maybe throughout the week, leave it in the comment section below. I love talking trading if you can't tell. All right, wish you guys a great and safe weekend in the markets. And until next time, plan your trade, trade your plan. Take care.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name, all our insecurities are on. This is